Alrighty, good afternoon and morning to all of our viewers. Thank you for joining us today for the 5th episode of the Weekly Wrap by Tech for Fin, where we discuss some of the hottest fintech topics in the news from the past week, along with a new guest joining me every week, and we'll aim to do that in just 15 minutes or less. I hope you got your cup of coffee ready. I certainly do. Let's not waste any more time and get this show going. My name is Jeffrey Tower. I'm the Vice President of Marketing and Business Development at ChargeAfter. Allow me to introduce this week's guest, Tomer Michaeli, a giant on his own. He's also the general partner of Viola FinTech. Tomer, welcome to the show, and why don't you go ahead and introduce yourself?
So first of all, thanks, Jeffrey, for having me here.
Of course.
Really happy to be here. As you said, I'm a general partner at Viola FinTech. We are a $120 million fintech-focused fund based in Israel, but investing globally. We are part of the Viola Group, which is the largest tech-focused investment group in Israel, managing about $3 billion in asset under management. The group has several investment vehicles. We have an early-stage fund, Viola Ventures. Some of you may have known it as Carmel. They also do fintech investment. They've done some of the most successful fintech investments here in Israel. Companies like Actimize, Payoneer, Pagaya, Personetics, so on. We have a venture lending and alternative credit fund called Viola Credit. They also do quite a lot of fintech investment and lending, including UK-based companies like Market Finance and US-based companies and even Australia-based companies. We have an early growth fund, the group called Viola Growth. They've done their share of fintech investments as well. And Viola FinTech is the latest addition to the group, a very special vehicle in the terms that it's a vertical fund and not a generalist like the other funds in the group. We are a co-investment fund, and we're investing globally, which means that many of our portfolio companies are non-Israelis, and which also means that we have actually a pretty good perspective on the more global trends in fintech in geographies that are a little bit less often covered, at least here in Israel, like LATAM, like APAC, like Europe, and so on. So that's about our fund. My personal background, I'm coming from a combination of technology and entrepreneurship background, having spent many years in the Army, then joining here the group to the early stage fund, did about 5 years of deep tech investments. And then I left the company to start a fintech company called Fundbox, which provides short-term credit to SMEs in the United States. The company is doing quite nicely today, about 250 employees here and in the States. And about 3 years ago, I came back to the group to co-found the fintech fund here with my partner, Daniel Tzidon, who was the deputy CEO of Bank Leumi.
Very nice. And talking about Personetics, they're actually just the news yesterday, along with my company, ChargeAfter, because of Visa. More on that, you can just go ahead and Google that. We might go ahead and put a link to that later on in the comments to this Facebook Live. All right, so let's go ahead and get right into the deep of it and start off with our very first topic of the week. And this one is something that I covered in episode 3 with Mirav Harnoy from Moneta VC. And that topic is Facebook's WhatsApp. And Facebook's WhatsApp recently received a green light from the Indian regulators to launch. Now, Tomer, as you know, this launch has been in regulatory hell, as I like to call it, or regulatory limbo since about 2018. And obviously, the approval now to go live is a huge milestone for Facebook's entry into one of the largest markets, being India. Now, as part of the deal with the regulators, WhatsApp can only release its payment services to about 20 million users initially, right? What's 20 million users? Well, in India, that's not such a big number. With the market share capped at only 30%, this is a bid to slow on the Indian side, or the Indian regulator side. This is kind of like a bid to slow Facebook's distribution. So, Tomer, let me just ask you a question, really, really simple question. Why is Facebook so bullish on India specifically?
Well, I think it's quite honestly, it's quite easy.
Sure.
Facebook, let's face it, it's probably the most populated country on earth. So naturally, a huge untapped market, and not necessarily from Facebook or WhatsApp penetration, but most importantly from financial services penetration, which is basically this is the end game for Facebook. And more importantly, they have no or very little Chinese financial services players that are very active in many other emerging economies. There is a very deep distrust between the Indian government and the Chinese government, and not going into politics and to justify whether they're correct about that or not, but you just see very very little Chinese fintech players penetration into the Indian market. You mentioned last week Ant Financial, right, literally across the border, probably the largest fintech company on earth with very little presence in India. So basically, huge opportunity, untapped market, less competition, at least from the Chinese side.
Right.
So a perfect playing ground for Facebook. On the other hand, of course, very strong regulatory control, which I think they actually launched, I believe, about a year ago, and the launch was imminent, I think, last year, and they basically blocked it in the very last minute, which shows that actually the Indian regulator is extremely wary of the potential of monopoly over Facebook over financial services, because again of the fact that they have such a huge market penetration on social network and instant messaging on the one hand, which is a huge potential for growth on financial services. Everybody, or probably 90% of the Indian population has cell phones. Probably much fewer have bank accounts. So this is the opportunity.
Interesting. So, earlier this year, Facebook paid a whopping $5.7 billion for a mere 10% stake in Reliance Jio, an Indian telecom giant. And Reliance has an e-commerce grocery arm called JioMart, which will work with WhatsApp to rival Walmart's own Flipkart and Amazon, the two other major e-commerce players in India. But WhatsApp Pay will also rival digital payment services such as Walmart's Phone Pay or Google Pay, or talking about China, Alibaba's backed Paytm. So, Tomer, do you see more of the same type of consolidations taking place elsewhere in the world, or is India the testing ground for a much wider global go-to-market for Facebook's payments and really the e-commerce dominance, which we've really seen Facebook taking more of an active role in the past year and past 2 years as well?
So I think I'll divide that answer to two.
Sure.
And because first of all, I think that India is a pretty unique case, right?
Yes.
Because I think in general, Facebook has very clear, aspirations to control its destiny and definitely to be a very, the very dominant players on financial services, be payments now and later, everything else. And I think that in India, and by the way, that you see that through Libra, of course, and many other projects that they've launched, and met a lot of regulatory scrutiny and resistance. But again, I don't think that it's for one iota diminish their aspirations and their plans. But again, I think that India is a special case because acquiring a stake in an e-commerce player as a way to put a foot in the door into the payment industry. I think this is something that is something that is very unusual for Facebook, and I'm not sure they're going to follow it unless they're in very very large market that justify that sort of deviation from their main strategy of basically getting, because e-commerce has a lot of operational aspects. You touch stuff, you send it back, fulfillment and shipping and all that stuff that let's be honest, Facebook is not that interested in that unless it's digital goods.
Correct.
But of course, there's a very strong payment component here as well, both on the payment processing and
Right.
so on, and lending later on. So again, I think that India is pretty unique in that sense, that, and I'm not sure. I think that definitely Facebook will be very active on the payments, and maybe will also acquire companies that are more on the payment side.
Sure.
I'm not sure that acquiring an e-commerce or having a big stake in an e-commerce place, something they will replicate very often.
Interesting. So in similar industry-related news, we'll take a hop over to Brazil real quick. Oddly enough, Facebook's Pay was there. They were actually live there for about a week before being shut down by the regulators. We're talking about Mercado Libre, and Mercado Libre has obtained a banking license and can now operate as a financial institution in Brazil. Now, this move comes as no surprise to me, at least as e-commerce and payments are in hypergrowth, and marketplaces want to own the entire experience. Now, Mercado wants to become a much larger provider of credit than it already is. Now, as you know, both you and I are in, or you were in, I am in the world of consumer financing. So, as you know, consumer financing, or what's called now, as well as buy now, pay later, as an industry is really hot right now. And Mercado Libre, or Mercado, received a $75 million investment from Goldman Sachs to expand on their existing credit services. With more than $740 million in credit loans distributed by Mercado since 2017, and with Mercado's loan origination up nearly 160% quarter over quarter, and with payment volume up by nearly 100%, or really at 92% year over year, it's kind of clear that Mercado is not only becoming an e-commerce giant in Latam, rather they are gearing up for becoming a financing giant. And that actually kind of plays on what you just mentioned right now about Facebook wanting to get more into the payments side of it. So we're really seeing everybody trying to get into payments, right? So Tomer, what's behind Mercado's moves, and where do you think Mercado is really headed?
So I think that I will actually take what you said and take it one step further. Not only everybody wants to go into payments, everybody wants to go into fintech.
Right.
Embedded fintech, there are many names for that, but Facebook wants to go into payments, Amazon wants to go into lending, Uber wants to go into payments and lending as well, and maybe checking account, and Mercado Libre, and the reason is very simple. Actually today, because of both regulatory and technological advancement, today it's way more easier to provide financial services to your customers. And again, based on that technology that we call today banking as a service, or whatever you want to call it. And again, this is where Mercado Libre is heading as well. They want, 10 years ago, if you had a bunch of customers, you want to monetize on them, the effort that you needed to put into providing them financial services was insurmountable. But today, it's much easier, again, both from regulatory and technological perspective. And Mercado Libre, which amassed, through its, other product that you've mentioned, also Mercado Pago and Mercado Credit, huge, audience, both on the merchant side as well as from the consumer side. For them, it's a natural next step to solidify their ownership of the customers, to deepen their moats against, the competitors, be it, Amazon or others.
Right.
So that is, for me, completely natural next step, which I honestly think many other companies in many other industries and many other geographies will follow suit. So I'm not surprised by one bit.
Right. So it kind of seems that, like, Mercado, well, everybody knows that Mercado is a e-commerce marketplace giant, but it kind of seems like they're going to turn into really a financial marketplace giant that will dominate Latam, and who knows, maybe they'll go further up north. I mean, they are on NASDAQ, if I'm not mistaken, last I checked. Now let's go ahead and on to another growing trend and something that we've covered in the past episodes is there's yet another challenger bank that has popped up out of the UK. Surprise, surprise, right? And we will welcome Fortwo to the game. And just like you were saying, Tomer, basically, or really anybody can become a fintech. Lyft wants to become a challenger bank, right? Or can they become a challenger bank? So, Tomer, help me understand this. Can anybody become a challenger bank? Like, what's stopping others from getting into the game? And really, can Lyft become the next big challenger?
Again, I think that everybody can, and everybody to a certain extent will become. I'm not sure that challenger bank, but definitely provider of financial services. And again, that Shopify, for instance, it's an amazing example. I think that more than 50% of their revenues are already coming from financial services.
I've actually come from the e-commerce industry myself. I've been in it since about 2004. And I always say that Shopify is not necessarily an e-commerce platform. Rather, what they're a payment gateway that happens to provide marketing and e-commerce tools.
Yeah, I completely agree. I completely agree. Probably at some points, as you said, the monetization scheme or the business model will be based on some sort of financial services. And the delivery or the user experience or the product will be, either marketing or, distribution or fulfillment or it can also be telecom services or media or gaming or entertainment. So, so again, I think, go ahead.
No, please.
So yes, I think definitely Lyft has, so my point is that any company with an engaged audience can and honestly should be a challenger bank or a provider of financial services. Now, naturally, that means that the traditional challenger banks, actually are going to be in a deeper problem than they are right now. Exactly. Even today, being a challenger bank is actually quite challenging. No pun intended. But again, depends on where you are. In Europe, you can't make any money on deposit. You're actually losing money on deposits. You can also make very little money on interchange. So the only way for you to make money is either premium services or go upstream to SMBs, which are actually quite profitable. And where you see actually profitable challenger banks is actually in the SMB space. In the US, the story is a little bit different, but honestly not entirely different. So I think that actually this will put the traditional, as much as you can call them, challenger banks and even
incumbent banks,
yeah, but it's like there's the incumbents like the Barclays in the city, and there's like
incumbent challengers.
Exactly, the incumbent challengers like number 6 and Chime and Revolut, which it will face competition yet from another front.
So Tomer, is it safe to say, or really in your opinion, are challenger banks, or let's call it the incumbent challenger banks, or even the newer challenger banks, they're not just a fad. They're here to stay and to continue to grow and to morph and to take on more faces and to provide more services? Is that something safe to assume?
Honestly, or are they going to go away? I'm not completely convinced about that. I think that I think that they had definitely a lot of momentum just based on like user growth and so on. Sure. But with some other companies as well that had large momentum and couldn't monetize on that well enough. So I think that it will be it's too soon to tell, honestly. I think that the real let's face it, most of the consumer challenger banks, their account holders don't deposit their salaries there. They're still sort of like an expense account or something like that. So I think that the real test will be in 5 years from now if these customers will take mortgages from number 26 or from Chime or from Revolut, if they're going to start saving there or investing through them, and this will be if they will pass that milestone, then I think they definitely have much more viability in the long term. And if not, we're going to see, consolidation and
consolidation. Sure, right.
Yeah. So
it's actually interesting because Fortwo is selling their proposition as being secure, reliable, and international financial reach, which I assume is the same with most challenger banks, or should be. But the other thing that the bank is actually quoted, or has been quoted saying, is that they want to serve up a bespoke multi-asset investment platform, which gives customers access to joint venture opportunities available for investments alongside, and here's a good one, experienced institutional investors. Interesting way to sell a challenger bank to people that you could just find on the Google or App Play Store.
Yes.
Well, everybody, yeah, go ahead. Sorry.
I agree. I mean, I think that, the challenge today, again, no pun intended, for a challenger bank is differentiation.
Exactly. Yes.
And we see again throughout Europe, you see, those that are focused on SMBs, and you see those that are trying to focus more on the affluence and finding more niche, sort of like target audiences. But again, I think that unless they're coming with a very robust, business model, they're gonna, especially, I think that for most of the newcomers, it's going to be super, super hard, and they're super late to the party. For us, to invest right now in a challenger bank, it's a very, very, very high bar. Again, I'm talking now, putting the investor hat right now.
Got it. Well, that's it. That's time. Thank you, everybody, for joining us today for episode 5 of the Weekly Wrap by Tech for Fin. Tomer, thank you so much for joining us all today and sharing your input on the hottest topics in the fintech news. Really, thank you so much. You gone over a lot of good information. Please make sure to join us next week for episode 6. Same time, same place, same host, new guest. I've been Jeffrey Tower. Stay safe and be well, everybody.
Thanks, Jeffrey, so much for having me.
Thank you.